Hi, if you don't know me, I'm Craig Cody. I specialize in accounting and tax strategies for agency owners, helping them keep more of what they make by actually understanding how the tax code works. And today I'm going to show you how to legally turn your next vacation into a tax deduction. What if I told you your next vacation, and yes, even a luxury one, could be tax deductible? Not a loophole, not a hack, just knowing the rules. When you convert a personal trip into a legitimate business trip, your transportation can become 100% deductible. We're talking flights, we're also talking hotels and even high-end hotels. And depending on your tax bracket, that could mean a 30 to 60% discount funded by the IRS. But you have to do it correctly. So let's break down the 5 rules that actually matter. Number 1, the big idea. There are 2 buckets of expenses when you travel. One is transportation, which is all or nothing. If the majority of your trip is business, you deduct 100% of your travel. If it's not, you deduct 0. Living expenses are day by day. Hotels and meals, only deductible on business days. So this is really about structuring the trip the right way. Number 2, the profit motive. You need a clear reason this trip helps your business make money, okay? Think meeting clients, expanding into a new market, attending something tied to revenue, and write this all down. Rule number 3, the primary purpose test. Would a rational business person take this trip for only the business reason? If the personal side outweighs the business purpose, you lose the deduction. The primary purpose test, and this is a really big lever, if most of your days are business days, your transportation becomes deductible. So yes, you can go somewhere great, but you need more business than vacation. You need to stay overnight. No overnight stay, no deduction. Simple but very critical. And this may be the most important rule. Documentation. And this is where most people fail. You need dates, locations, expenses, business versus personal days, and the business purpose. No records equals no deduction. So how about some real example? A company holds a board meeting in places like Vegas or in Puerto Rico and deducted the trips. Why? Because the business activity justified the travel. But another business owner took clients to the Super Bowl in another state. That would be denied because it was primarily entertainment and not business strategy. And this is really about how you actually use this. You want to plan real business activities. You want to make the majority of the day a business day. And you want to tie everything to revenue or growth. You want to keep clean documentation because this is really not about pushing the limits. It's about being intentional and planning. So let's wrap this up. Next time you plan a trip, don't just ask where you're going. Ask, how do I structure this so it benefits my business? Because if you do it right, you're not just taking a vacation. Because if you do it right, you're not just taking a vacation, you're taking a tax-optimized trip. If you want more strategies like this, real tax planning, not surface level advice, subscribe to our channel. All right, before you go, if you're an agency owner and you want to keep more of what you make, I've got 2 things for you. First, grab a copy of my book, The 12 Biggest Tax Mistakes That Cost Agency Owners Thousands. It breaks down the exact mistakes I see every day and how to avoid them. Second, if you want to see what this looks like for your business, get a free tax analysis. We'll take a look at what you're doing now and show you where you might be overpaying. And if this video helped you, make sure you subscribe so you don't miss future strategies on tax planning, cash flow, and building a more profitable agency. I'll see you in the next video.